Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Monday, January 4th, 2021, first one of the new year. Um, right now, as we're taping this, most major indices are down about 1.5% to 2%. This wasn't what people were looking for. Going in this morning, futures were pointing higher, probably for no other good reason than we tend to start the year on a good note. We tend to start new months on a good note. There's always the idea that there's new money coming in. Yet, on the other hand, it's not that surprising. When you think about how we closed on Friday, where we shot up about 15 or 20 points, and I'm talking S&P points, in about the last hour, half an hour, you definitely had some room to give some of that back. And I think once that started to give those gains back, it really accelerated. It's tough to come up with a reason why. One of the themes that I've been working on is that essentially one of the themes of 2020 was the more risk you took, the better you did. And we could go down the spectrum, but think of the riskiest type of investments that you could have put your money in the last calendar year, and particularly in the last 6 to 9 months of that year. You did the further out you were on the risk curve, the better you did, pretty much. But that's hindsight. So what does that mean going forward? Are people over-risked? Are people finally waking up today and saying, oh, wait a minute, there's this election in Georgia on tomorrow. We probably won't know the outcome for a day or so because it's looking very close. But that has the potential to upend a lot of what we've seen over the last couple of weeks. More or less, we've been straight up since the election in early November. And one of the rationales was that we were getting divided government. Divided government tends to be good for stocks, and so off we went. Well, as the polls go, and of course the polls have been anything but trustworthy in the last cycles, as we all know, polls are leaning toward the possibility of a Democratic sweep in Georgia, which would mean that the Senate moves Democratic. We're not talking personal political preferences here. We're talking strictly market dynamics. And if the rationale for, let's say, the rally that we saw over the last 2 months was because of the prospect of divided government, this upends that. And that could be the market's realization today that there is this risk factor out there that we've been largely ignoring. Volatilities were not elevated for this week relative to next week, let's say, where you don't have an event, you just have a normal January expiration. This week you have the Georgia election tomorrow, and on Wednesday you have, I don't know what you call it, but these electoral challenges coming up in the House and Senate, which are probably not likely to lead anywhere, but give the implication of chaos. The tape that was released yesterday definitely does not help the electoral picture, I think, in Georgia, which is probably why you're seeing this acceleration to the downside. Or it could just be a simple answer of, wow, we came a long way in 2020, and, let's take a little bit off the table. Maybe it's a little bit of a recognition that these things don't necessarily go up. We had a stellar year. Things don't go up all the time, is actually what I should say. There's so much to unpack here. It's tough to read one day into it. It is a bit startling on a day that tends to have a positive bias to see us down substantially. You'll start to hear the theories that, the first 5 trading days tell you whether the year's up or down, or the first 2 trading days tell you whether the year's up or down. Who knows? We'll let those things unpack as they will. I want to deal with the stuff as they come, and that is, you're seeing a bit of a change in the risk trade. Now, going back to the election idea, though, remember, leading up to the election, it wasn't as though we sold off on the idea of a blue wave. As a matter of fact, the market was embracing that idea too, because markets ultimately are more addicted to stimulus of either the monetary or fiscal kind than they are to anything else. And so the thought was, if you had this blue wave, well, then you'd get bigger stimulus, and that's okay for the market. And then you didn't get the blue wave, and we got a divided government, and okay, that's okay for the market. So is it rationalization, or is it just, or is that fact? Too hard to unpack. I guess we'd have some clarity depending on what the results are tomorrow. Does the market rally if the House and Senate remain divided? Does the market sell off? Right now, there's so much to unpack. What I had been saying last week was that we were underpricing the risk going into these Georgia runoffs. With VIX popping today, with markets selling off a bit today, I would say that we're starting to price that in. And we'll find out how much it's priced in over the next couple of days. Stay tuned. Take care.